2023 has been a record-breaking year for the stock markets. The Nifty is up 20%, up for the 8th consecutive year for the first time in history. The mid-cap index is up 46%. In fact, all sectoral indices have gained for the year. Mangalam is standing by with the year that was on the Lal Street and also compares how Indian markets have fared against the rest of the world. Mangalam, over to you.
8 years of positive returns is what we've seen in 2023. So let's tell you, in these 8 years of positive returns that we've seen, we've gone through a pandemic, we've gone through multiple wars in the world, we've gone through, GST implementation, demonetization, all these worries, and the Nifty has compounded at around 13% itself. If someone told you at the start of this year that, you will manage to hit a record high in the trough of March where we were around that 16,000 points, people had said, yes, we'll take it with both hands. And take it with both hands is what they've done itself. Because at the start of the year, the market was looking at a lot of walls of worries. The US Fed tightening, we had, high inflation, the FII selling from emerging markets, and geopolitical tensions in the world as well. But everywhere there is a wall of worry, there are lands of opportunities, and India was that land of opportunity. The India growth story, political and currency stability in India, that's what worked in our favor. Strong domestic and SIP flows, nearly $2 billion per month coming in. Government-backed themes in our markets doing well as well. And at the same time, we had the rise of luxury and leisure demand post-COVID coming into. What also helped us was some good performance coming in other global markets. The Nifty ended 20% higher this year. Of course, the 8th consecutive year of gain. On a percentage basis, it may have underperformed NASDAQ, S&P 500, Nikkei in Brazil. But remember, on a compounded growth basis, it has been a rank outperformer. And it has also outperformed some of the other important markets. If you just take a look at it, it's better than Dow Jones, it's better than the FTSE, definitely better than the Chinese indices, which corrected. This year has been the year of mid and small caps. Both these indices have gained anywhere around 50%, and these are indices, so individual stocks have done a lot better. And who's made a lot of money? We've had the PSE index. This year is definitely the year of the public sector enterprises, 81% higher on that index, followed by Nifty Realty, Autos and Nifty Pharma doing well. Nifty Bank was an underperformer with a gain of just 12% this year. The FII sold about 15,000 crores this year, and the domestic institutional investors, they showed the money, almost 15,000 crores every month in the year 2023, 1,68,433 crores and counting in the Indian markets by the domestic institutional investors. The Nifty gainers, top of the ranks, Tata Motors, the one Nifty stock that doubled this year, NTPC, Bajaj Auto, Coal India, L&T, all of them doing extremely well. Some of the underperformers included some heavyweights like HUL, Reliance and Infosys as well. So let's see how they perform in the next year. It was the themes that did well this year. So let's talk about the themes. The PSUs, REC, PFC, near 250% gains. BEHEL, NBFC, all of them 130 to 140% gains coming in. If you were in a defense PSU, you made a lot of money as well. The Mazagon Dock, we had Cochin Shipyard, HAL, BDL, BEL, all of them doing extremely well. And then we had the railway theme. This one was really in the fast track. 360% for Titagarh, 200% for Texmaco, Railtel, Ircon, RVNL, moving anywhere between 150 to 190% as well. And with the markets doing so well, why wouldn't the capital markets theme itself do well? BSC up 310%. Anand Rathi, Angel One, the financialization of savings did extremely well this year in 2023 as well. But let's talk about a couple of these underperformers. We had Delta Corp plagued by regulatory issues. Easy Trip, AB Fashion, Page Industries were some notable underperformers. But let's end on a high. These were the stars of 2023. And I had to cut off gains at 250%. So we had Suzlon, Inox Wind from the wind energy space do well, Zentech from the defense space, and Piccadilly Agro. This is the company that makes the Indri single malt, 550% in 2023 itself. So with that, it's a wrap on 2023. It's over to 2024.
Well, yes, we look forward to 2024 for the markets. Mangalam, many thanks for joining us. 57 new companies listed on the Lal Street in 2023, from fintech to pharma to cables. Companies from a wide range of sectors made their market debut. Now, the last 3 months alone saw 23 companies launching IPOs as the primary markets ended the year with a bang. Yash is standing by to wrap up the year that was for IPOs on the Lal Street. Yash.
Year 2023 will certainly be remembered for the rush of companies which brought their offers on the Lal Street, the exceptionally strong subscription numbers and, of course, the listing high. but it was also the year which saw a big change in the intent behind bringing these companies to public. Now, before we speak about that change, let's take a look at what year 2023 was for the Indian primary market. A total of 49,351 crore rupees was raised through primary market in calendar year 2023. But interestingly, it was still about 17% lower than what was raised in 2022, which stood at 59,302 crore rupees. Another interesting statistic, the total fundraise in the current calendar year was nearly 60% lower than the highest ever fundraise, which happened in the year 2021 at 1.18 lakh crore rupees. Now, on one hand, where the fundraise was lower than the previous year, the number of listings that grew significantly, which means that the average fundraise for IPOs did come down. Year 2023 saw a total 57 companies getting listed on exchanges, which was higher by about 40% as compared to the previous year, where we saw 40 companies getting listed, but of course much lower than the best year that we've seen so far, which was 1995, where about 1341 companies got listed on stock exchanges. Now let's speak about the change in the intent. This year, out of the total fundraise, 42% or about 20,600 crore rupees was raised for fresh capital, which generally gets used towards growth, capex or deleveraging. This compares to just 30% or about 17,600 crore rupees as fresh capital out of the total fundraise in the previous year, that is 2022. The share of offer for sale out of the total fundraise in 2023 stood at 28,700 crore rupees versus 41,600 crore rupees in 2022. Now, since we are talking about offer for sale, here's a list of companies where private equity players sold big through IPOs in 2023. Private equity players raised a total of 7,783 crore rupees through IPOs, and almost half of that came from Mankind Pharma. That stood at about 3,200 crore rupees, which was followed by Concord Biotech, RR Kabil, Hunasa Consumer or Mamaearth. Now let's talk about the subscription cheer. Moti Sons Jewelers, that became the highest subscribed IPO, receiving subscription of 160 times. Tata Technologies gave the best listing gains this year of about 140%. And if one moves beyond the first day, first show, then IREDA was the stock which has given the best returns out of all companies which listed this year. IREDA has given returns to its investors of nearly about 230% so far. The biggest disappointment this year has been IRM Energy. The stock is down about 8% this year. This was 2023 for you. But 2024 also looks promising for primary market, with 24 companies already having received SEBI approval for their IPOs. These 24 companies will look to raise 28,440 crore rupees when it comes to their public offers. About 30 companies are still waiting for SEBI's approval for their IPOs, and if all these public issues were to materialize, then 2024 will be the best in the last 3 years for the Indian primary market.
Well, we look forward to that, the year that was on the Lal Street for IPOs, and more importantly, the year that it could be for IPOs. Yash, many thanks for joining us. It's been an eventful year for India's biggest corporate houses. Succession planning took shape at Reliance Industries and the Aditya Birla Group. The Tata Group took a group company to the Lal Street for the first time in nearly 2 decades. Nisha is standing by with the year that was for India's top conglomerates. Nisha.
India's large conglomerates have seen a transformational year 2023. Now, 3 things that stand out: fortifying succession planning, expansion into new businesses, and also new listings after decades. Let's elaborate. Reliance Industries Chairman Mukesh Ambani's AGM speech on continuity with change is emphatically formalized with group's next gen, Isha, Akash and Anant Ambani's induction into the mothership Reliance Industries board. Even in the case of Aditya Birla Group, both Aryaman and Ananya Birla have been elevated to become directors at Apex decision-making body ABMCPL. New verticals have been added by India's top business houses this year as well. Birla's foray into paints business is a big bet. Aditya Birla Group also entered into more B2C businesses like branded jewelry, Novel Jewels, and an innovative B2B e-commerce platform for construction material, Birla Pivot. For Reliance Industries, it's a significant year with the fastest 5G rollout pan-India. In online retail, beauty platform Tera made a big splash, and even the launch of its FMCG brand Independence shows the group's focus on capturing the consumption market visible amongst its other ventures across verticals as well. Tata Group made some significant progress in expanding its manufacturing capabilities across verticals by formalizing new plans like Tata Electronics taking stride in setting up a semiconductor unit. Tata Group also forms a new company, Agratas, to set up a battery plant in the UK. Auto vertical Tata Motors partners with Cummins to manufacture low to zero emission tech products. Even JSW Group, known for old economy sectors, made a foray into new age sector of electric vehicles by forming a joint venture with MG Motor India. So the year also stands out due to the blockbuster listing of Tata Tech, and IPO from the House of Tatas after almost 2 decades. Even JSW Infra listing came as an offering of IPO from the group after 14 long years, and Reliance listed Jio Financial Services, a new listed entity from this conglomerate after decades. So what lies ahead for India's large conglomerates? Strengthening new business verticals. A lot of them are the new age businesses or sectors of the future. Surely this space is growing fast, and the scale-up of new verticals will make sure that the next wave of listings are much sooner than the last long gap that we saw. And finally, driving all this will be the energetic next gen, taking more important positions and driving the decision-making for the groups in the coming year.
2023 was also a strong year for the Indian aviation industry, with record airplane orders and strong growth in domestic and international travel. But the sector has also seen plenty of turbulence. Gulf First has been grounded, SpiceJet faces financial difficulties, and India's largest carrier, Indigo, has had problems with its Pratt & Whitney engines. CNBC TV 18's Danish Anand reflects on the year gone by and the key trends emerging for India's aviation sector in 2024.
Indigo had a strong start in 2023. Armed with the market share exceeding 60%, it reported its highest profits in the first quarter of FY24. It also became the first airline in India to have a fleet of 300 aircraft and ordered 500 Airbus A320 aircraft. This is the largest order in the history of commercial aviation and is touted to be in the neighborhood of $50 billion. Indigo also became the first Indian airline to operate 2,000 flights daily, expanding both its domestic and international network.
As Indigo ready to take off on an ambitious flight path, it ran into engine troubles quite literally. Problems with Pratt & Whitney engine led to the grounding of 40 of its aircraft in the first half of 2023, and 30 more planes could be grounded by March 2024. But it says it is working things out, and with close to 1,000 aircraft on order, it is set to receive one new aircraft every week in 2024.
Now, while Indigo maintained its market dominance, the Tata Group has been playing catch-up and has emerged as a strong challenger. Air India unveiled a new logo and brand identity, replacing the classic Maharaja, and with its eyes set on strong growth, it placed an order for 470 aircraft with Airbus and Boeing. Its growth plans were propelled by forward movement on the merger between Air India and Vistara, for which final approvals are expected. Air India, however, has not been without its own troubles. From unruly passengers soiling seats and co-passengers, to incidents of mechanical trouble in aircraft, to multiple run-ins with the aviation regulator, one of which resulted in a 10 lakh rupee fine for non-compliance with DGCA rules on passenger compensation. But the erstwhile Maharaja is undaunted, and Air India is set to receive a new aircraft every 6 days for the next 18 months, which would lead to some strong route expansion.
ICRA estimates the domestic air passenger traffic to grow by 8 to 14% in FY 2024, thus reaching around 150 to 155 million. As far as the international passenger traffic for the Indian carriers is concerned, ICRA estimates the growth at 7 to 12% for FY 2024 to reach around 25 to 27 million passengers.
For one airline though, the outlook is not so rosy. The Wadia Group-backed Gophers filed for voluntary insolvency, a move that sent shock waves throughout the industry. Financial headwinds had been a while brewing, but it was a delay in the delivery of replacement engines by Pratt & Whitney that proved to be the final nail in its coffin. The airline's lessors have sought repossession of multiple Gophers aircraft but have been unable to do so due to the ongoing lawsuits.
Well, Gophers is desperately looking for buyers because the Wadia Group has made it clear it is not keen on reviving the airline. This has been a troublesome process. Jindal Power Limited, which initially expressed interest in buying the airline, withdrew its offer. As the 2023 wound down, SpiceJet and Sky One have shown interest in investing in the airline. But whether these will fructify is anyone's guess. For now, Gophers flight operations have been non-existent for over 8 months and the airline could be staring at a liquidation if a white knight does not ride it to its rescue. Interestingly, SpiceJet, which has immense interest in Gophers, has had to fly through its own financially cloudy patch. For one, it has been juggling lawsuits filed against it by aircraft and engine lessors in both NCLT and Delhi High Court. For another, the Delhi High Court came down heavily on the airline CMD Ajay Singh for failing to pay arbitral dues to erstwhile promoter Kalinidhi Maran, and the Supreme Court even threatened to put Singh in Tihar jail if he failed to repay Credit Suisse. Ajay Singh had to ride to the rescue again, this time with an infusion of 500 crore rupees. He also managed to bring in 2,254 crore rupees in funding from a clutch of investors, including 1,100 crore rupees from the family of businessman Harihara Mahapatra. Speaking of investors, the late ace investor Rakesh Jhunjhunwala's pet project, Akasa Air, has been flying high. It became the first airline globally to have a fleet of 20 aircraft within the first 12 months of operations. The airline will be starting international operations soon, starting with Qatar, Kuwait and Saudi Arabia. And even though Akasa had to deal with a mass resignation of 43 pilots, it has managed to hold the course and is adding both pilots and aircraft to its roster.
Our growth target, as you talked about, 76 aircraft by the end, by mid of 2027 is the path that we have set on today. As we announce our 3-digit aircraft order in January, we will come out and lay out the plan for the aircraft delivery strategy all the way through the end of 2032. If at all there was a requirement for a fundraise, it would be associated with our 3-digit aircraft order. And by the way, I can tell you that that's imminent as well. It might slip into January. We hope to close it by the end of the year. In December, by the end of the calendar year, we'll close with a fleet of 22 aircraft. By March of this year, we should be close to 25, and we'll double our fleet by the end of the next fiscal.
Elevated ATF prices, supply chain issues, depreciating rupee, and impact of grounded aircraft are some of the major headwinds for the Indian aviation sector in 2024. While experts feel that there will be 200 grounded aircraft by the end of the current financial year, 2024 brings a ray of hope with Indigo, Air India, Akasa set to receive a steady flow of new aircraft. Hopefully, the grounded Gophers would find a backer and take it to the skies again. In New Delhi with video journalist Lakshman Singh, this is Danish Anand for CNBC TV 18.
Now, home sales continued their upward trajectory through 2023, but the one segment that stood out was the luxury segment, and we're talking homes priced higher than 7 crore rupees a unit. The super luxury category also saw brisk demand, with units priced over 40 crore rupees a piece have hit 3 figures. Jude Sanith recaps the year that was for India's luxury real estate market.
2023 has been a breakout year for India's super luxury housing market. Until November, the country saw 58 homes priced above 40 crore rupees a piece sold across its 7 top property markets. 12 of these carried a price tag higher than 100 crore rupees. Property consultant Anurag estimates that the super luxury segment will end 2023 with a significantly higher sales tally.
Above 40 crore rupee an apartment. So that is the super luxury, which we believe will be anywhere between 75 to 100 transactions. Above 40 crores for the calendar year 2023.
Selling 100 super luxury homes in just 1 year is no mean feat. After all, the whole of 2022 saw only about 13 homes priced above 40 crore rupees getting a sold sticker being stuck to the front door. As of November, the total value of super luxury home sales was 4,063 crore rupees, 4 times higher than 2022's 1,170 crore rupees. Luxury homes, those priced above 8 crore rupees, have also been going off the market like hotcakes. Anurag estimates that by the end of 2023, India will see 15,000 to 20,000 transactions being closed in this price bracket. These calculations are based on developers like Prestige Constructions, notching up impressive sales tallies.
We did 85% of what we did last year. In the first 6 months, we crossed 11,000 crores of sales. We did last year 13,000 crores of sales. We are looking forward to ending this year closer to 20,000 crores of pre-sales.
The secondary market too saw a spate of luxury and super luxury deals. In Gurugram, North Lutyens, Delhi, one homeowner sold his apartment unit at DLF Camellias for an unbelievable 100 crore rupees. And if you find that hard to believe, nearly 3 home buying deals in Mumbai were closed at approximately 200 crore rupees per apartment unit. Big ticket home sales may be reason to cheer, but developers say they're nowhere near the peak. Projects like Oberoi Realty's 360 West in Mumbai, Lodha Malabar and Raheja Artesia have inventory to spare and are expected to continue fueling super luxury buys in 2024. DLF's latest luxury launch, Privana South, could signal the next phase of luxury home sales in NCR.
We look forward to the new super luxury development after Camellias. We are looking forward to Mumbai, we're looking forward to Chennai, we're looking forward to some developments outside of the national capital.
So as things stand, 2024 promises to keep the party going in the luxury real estate space. Experts say a lot of these could be fueled by people booking profits after the recent bull run in equities, a fall in interest rates as the RBI eases on its hawkish stance, and preferences of the increasingly aspirational home buyer continue to evolve. In Chennai, Jude Sanath.
Well, that's it then on this edition of Rewind 2023, recapping the year that was, but more importantly, giving you a heads up on what to expect in the year ahead. Here's wishing all our viewers a very happy new year. Stay tuned to CNBC TV 18. We'll be back with more energy and enthusiasm in the year ahead.